Welcome back to Keeping It Real, the podcast where we cut through the noise and talk about what's actually happening in money, markets, and real life. I'm Philip Villanueva, holistic insurance and financial broker here in Ontario.
And I'm Irene Meyer, licensed holistic insurance and financial broker in Ontario and Alberta, with over 20 years of experience as a bank manager.
And today we're tackling the most searched and discussed topic in finance right now: artificial intelligence. Not the hype, not the headlines, but what AI is really doing inside banking, investing, insurance, and financial advice.
Yeah, and this isn't theoretical anymore. AI is already influencing decisions that affect people's money every single day.
So Irene, AI in finance has exploded almost overnight. Why is this suddenly such a dominant conversation?
Well, finance is data heavy, time sensitive, and risk driven. So AI has reached a point where it can process massive amounts of financial data faster and probably more accurately than humans, and institutions can't afford to ignore that.
Really, so this isn't about convenience anymore. It's about survival.
Exactly. CFOs, banks, insurers, and asset managers are under pressure to move faster, reduce errors, and really manage risk more intelligently.
Okay, so where is AI already showing up that most people might not even realize?
Well, pretty much almost everywhere. Credit approvals, fraud detection, portfolio construction, underwriting, compliance monitoring, and even customer service. If a decision happens instantly, AI is usually involved.
So most people are already interacting with AI in finance, whether they know it or not.
Exactly.
And I've heard AI is changing how companies forecast and plan. Can you explain that?
Absolutely. One of the biggest shifts is that forecasts are no longer static. AI is continuously and can continuously analyze massive amounts of data and really simulate different scenarios. That's what we call stress testing.
And I have heard that in the industry before, but our viewers may not. So stress testing, let's slow that down a little bit. What does that actually mean in practical terms?
Stress testing means, asking what happens if things go wrong. AI can run thousands of scenarios like instantly: interest rate spikes, market crashes, revenue drops, and really show which parts of a plan might be vulnerable. Traditional methods only tested a handful of scenarios, so AI gives a much more complete picture.
So instead of just assuming things go well, it actively looks for pressure points.
Yeah, exactly. That's where human oversight really matters. AI can show you what could happen, but it can't really judge how much uncertainty a real person can handle emotionally.
Well, now that brings us to a bigger conversation. AI versus humans, right? Especially financial advisors. Are advisors becoming obsolete?
No, the role is changing, I think, in many ways. The need for good advisors is increasing.
Interesting choice. On paper, AI sounds unbeatable. What does it do better than a human advisor?
Really just processing data, running calculations, analyzing scenarios, speed. AI wins there every time.
And so what can humans do that AI can't?
Really human judgment, context, emotion, life complexity. People don't live in spreadsheets, right? Like divorce, health crisis, family dynamics. AI can't weigh in those factors.
That's funny. We had that conversation in one of our previous podcasts, didn't we, about spreadsheet advisors? It's interesting that's the answer there. I also want to challenge a common assumption, right? AI is often described as an objective or neutral, but it's still being trained and preconditioned by humans, correct?
Yeah, absolutely. AI doesn't form independent judgment. It reflects the data it was trained on, the objectives it was designed to optimize for, and the constraints set by users and institutions.
Oh, so interesting. So bias doesn't actually disappear. It just gets automated.
Yeah. AI can reduce some errors, but it can also scale bias very quickly if no one is actually governing it.
And interestingly enough, and that governance, that's where advisors come in.
Yes. Advisors aren't necessarily competing with AI. They're supervising it. They validate the outputs. They question the assumptions. They make sure recommendations are appropriate for a real person.
So, but this also means that some advisors are in trouble, right?
They are, yeah. Selling advisors, like product-first advisors, commission-driven advisors, are really at serious risk, because if their value is running basic projections or like pitching products, AI does that faster and cheaper.
So the old model doesn't survive this shift.
No, it actually gets exposed, if anything. Like holistic advisors like like me and you, where we combine planning, coaching, and ethical oversight, those advisors thrive. AI becomes a tool for them, not a replacement.
So if we had to sum this up in one line,
Yeah. AI produces answers. Humans decide, and humans are accountable for the consequences.
well, that's really powerful, huh? So,
Yeah.
all right, we've covered a lot. Now let's put the test in a lightning round, fast questions, straight answers.
Okay, let's do it.
Okay, ready?
Okay. Oh,
AI in finance, opportunity or risk?
opportunity if governed. Risk if you just trust it blindly.
Will AI replace financial advice?
No, it will replace advisors who don't adapt.
Is AI already making financial decisions without humans?
Yeah, but within boundaries set by humans.
What does AI do better than an advisor?
Just process massive amounts of data really fast.
Okay, so what can no AI replace?
Human judgment under certain uncertainties.
And is AI unbiased?
No, it reflects the training, the data, and the objectives.
Who is responsible when AI gets it wrong?
The humans who are using it.
Which advisors are most at risk right now?
The product first, the sales driven advisors.
Which advisors will thrive?
Me and you. No, just kidding. Holistic planners like me and you who govern AI, not follow it.
Should clients trust AI generated financial advice online?
As a starting point, yes. As a final decision, no.
I'm trying to get you stumped and it's not working. Is AI making markets more stable or more volatile?
Short-term volatility, maybe long-term efficiency.
Oh, one myth about AI in finance you want to kill.
That actually it removes responsibility.
One line to sum up AI versus human.
AI informs, humans decide.
Okay, final question. Would you trust AI alone with your life savings?
No, I trust AI with a qualified human overseeing it.
And that's keeping it real. Thanks everyone for listening.